Yeah, so this pattern, and you guys can see my chart here, it's basically a large bear flag or in spirit of bear flag. Now, that doesn't mean that it's going to go straight down. In fact, I have a short-term micro breakout here. If you look at the Terra Luna collapse that caused or that Bitcoin took a hit on, Bitcoin dropped 45%. Worst case, it's got another 7,000 and change to go. And then we can start to think about really picking some up heavily and looking for some major upside. Yeah. So I think for me, what's important about how Bitcoin is reacting or not, or lack thereof reacting to the negative news tells me that the negativity on news related information is pretty much in Bitcoin's price. And that's really amazing to think about. I mean, it would take a huge epic earthquake bigger than FTX for it to have a big move down. So at this point, that bottom is in. What I don't think is in terms of the bottom for Bitcoin is when the stock market begins to really collapse.
In this highlight, Gareth Soloway discusses the recent pump in the price of crypto. However, Soloway believes that this recent 20% spike is going to be short-lived. As a day trader, Soloway is looking to capitalize on this opportunity over the next few days and weeks. However, he believes the price of Bitcoin still has a ways to go down before the next bull market. Make sure you stay until the end because Soloway reveals his price prediction for the bottom of this grueling bear market. Now, let's hear what Gareth Soloway has to say.
Bitcoin has been trading range-bound for the last 6 months. As you know, you called it 20K. After it reached 20K, it went down a little bit, and then it just kind of traded sideways since June. What would you call this pattern?
Yeah, so this pattern, and you guys can see my chart here, it's basically a large bear flag or in spirit of bear flag. Now, that doesn't mean that it's going to go straight down. In fact, I have a short-term micro breakout here. You can see this downsloping yellow trend line right here. And again, we broke above it. We're holding above it. All we have to do is take out 17,000. And I actually think you're going to get a short-term rally to the upside to about 18,400. So I actually am very short-term bullish, but you can't deny the bigger pattern here, which is still bearish. And therefore, again, I still have it priced in that we're still a few months away from a bottom in Bitcoin, and it probably has a decent amount lower to go.
Okay. Some would argue that this looks like 2018 all over again, when we had this big base, this big consolidation pattern. And then, as you know, in 2019, 2020, Bitcoin broke up to the outside. Is that what's happening?
Yeah, so I think it's the beginning of the end, right? I mean, you have FTX hammering the market, but I think one of the important things to take away from FTX and the collapse is that if you look at the Terra Luna collapse that caused or that Bitcoin took a hit on, Bitcoin dropped 45%. The FTX collapse, which was much bigger in terms of an earthquake for the crypto sector, you only dropped 25%. So what this is a market that still probably has some flushing out to go, but it is getting close. There's no doubt about it that we're getting close to it. We're also getting closer to potential regulation, which I think will be a huge asset for Bitcoin and cryptocurrencies, at least the Bitcoin and cryptocurrencies that are strong out there, as I do think that will be a avenue for big money to start to dabble in crypto again.
Now, you said that there's a little bit more downside. Now, you and I talked about the base for Bitcoin. Can we revisit that, please? What's the bottom here?
Absolutely. So I'm still looking at potentially 12 to 13,000 is a short-term target. I do believe it'll go lower than that and probably pierce 10,000 and could get as low as 9,000 before this is all over. So again, if you look at it, and there's a couple of ways you could look at it, the half full, the glass is half full, which is the negative, which is, oh my goodness, it could still go down 30, 40% more. Or you could look at it half full, which is basically saying Bitcoin's dropped from 69,000 to 16 and change here. Worst case, it's got another 7,000 and change to go. And then we can start to think about really picking some up heavily and looking for some major upside.
Mm-hmm. What about in the next couple of days? Are the charts pointing to any momentum in either direction for the next couple of days? Like you said, it's kind of choppy sideways.
Yeah, so this type of pattern, and again, you could even make a case that this type of pattern on the chart, this is a cup. and this would be the handle formation. So basically, I am bullish near term. And I know that sounds weird to people when I'm saying, yes, down the line, it's going to go lower. But remember, I'm a trader, right? So I'm looking over the next 1 week or so. And over the next 1 week, I actually expect a move to the upside, as I think, again, momentum will come through. And if you think about it, we heard about Silvergate, we've heard about, the GBTC, and we were going to talk about that in just a little bit. These aren't having a negative impact on Bitcoin right now. And that actually tells me that there's bullish potential price action. When a stock or a crypto doesn't fall on bad news for a sector, oftentimes you're getting ready to make a short-term pop.
How are you interpreting the price movement in relation to all this other macro news that's going on?
Yeah, so I think for me, what's important about how Bitcoin is reacting or not, or lack thereof reacting to the negative news, tells me that the negativity on news-related information is pretty much in Bitcoin's price. And that's really amazing to think about. I mean, it would take a huge epic earthquake bigger than FTX for it to have a big move down. So at this point, that bottom is in. What I don't think is in terms of the bottom for Bitcoin is when the stock market begins to really collapse more. And we talked about this in December at the live event. We talked about how I still think that there's another 25% down on the S&P in 2023. And I think that's going to be the kicker of how we get down to the targets that I've mentioned. I don't think it's going to be, another kind of earthquake. We're seeing them, like you said, with Silver and Gemini and Silvergate and all these other things going on. Yeah. That's not having an impact. People are immune to that in a weird way, but it's going to be when people get really scared in asset prices like stocks that they're going to ultimately end up selling crypto and driving it lower. Yeah, so I'm a buyer of Bitcoin, but again, it's a swing trade for me, looking for a move up here in the short term. But just understand, everyone out there understand that I'm not looking, this isn't a long-term trade. It's looking for a pop in the near term, the next 2 to 3 days, weeks, whatever it may be. And then once we get up, if we get up to about 18.5, I'll pare it back, take some profits, and then potentially just stay on the sidelines until I think there's a better entry.
All right, let's talk about the Fed now. Minutes came out earlier this week, and they basically announced that they would keep policy rates restrictive until inflation is no longer unacceptably high, were the words of the Federal Reserve governors. Let's pair that with the other economic data that came out this week, which is the ADP report. Jobs numbers came out. Initial claims were lower than expected, and the jobs payroll numbers were higher than expected, meaning the economy from an employment standpoint seems to be doing better than consensus expectations. Ironically, when that data came out a couple of days ago, I believe it was 2 days ago, the markets actually tanked. So Let's describe what happened this week with the stock markets in relation to the Fed, in relation to employment.
Yeah, so you're right. Private sector jobs numbers came out much better than expected. We know that the Federal Reserve released their minutes earlier this week and basically said, don't expect any rate cuts in 2023. And the markets didn't like that. The markets, again, this is hawkish talk. This is hawkish economic data on jobs. The key today, and this is why the markets rallied back on the non-farm payrolls number, they basically were thrown a bone in that wage growth has slowed. So again, who would have thought that saying, oh, people are not making as much money, or the amount that they're making in percentage terms is coming down a little bit. But that was the first sign that maybe there's some weakening in the labor market, and the market's just ripped higher on that. Now, I will say this, is that ultimately the market is going to like weak data, until we get to a point where we see a recession. And then when the Fed does not come to the rescue, the markets will freak out. And that's my base case for this year. I think by the second to third quarter, we see ourselves in a recession. The market and investors will say, hey, Federal Reserve, we're in a recession. Can you start cutting rates? The Fed is going to say, nope, we can't do it yet because inflation is too high. We don't want to see a repeat of the 1970s where they cut rates too early and then inflation surged back.
It seems to me like we're entering this new phase. Well, not new phase, it's happened before, but we're entering this phase where bad news is good news and good news is bad news for the markets, right? Is that more or less right?
That's correct. It's still bad news is good news right now for the markets, and that will be the case until the Fed stops hiking rates. So again, the market wants to know that there's an end of the rate hikes. The next phase will be back to bad news is bad news, because ultimately the Fed is going to stay strong on not cutting rates, and that's going to cause an issue when you have bad news on an economic recession. Yeah, and I mean, and think about the wealth destruction. I mean, you look at Apple and how many trillions of dollars that's down. You look at Tesla. I mean, you look at so many of these mega cap companies, Amazon, and again, the wealth destruction is unbelievable. But it all goes to the narrative of the Fed saying the Fed wanted to suck out liquidity. They wanted people to not feel so rich so that they couldn't just go compete for all the goods and drive prices up.
I highly recommend that you check out this video where George Gammon reminds Twitter why he does not like Michael Saylor, which leads to a heated Twitter debate that you don't want to miss. Click this video now.